over 14% per year in distributions, and zero NAV erosion. You're not going to find this ETF in the S&P 500. You're not going to find it in the Nasdaq 100. You're going to find it hiding in the Russell 2000, and very few people are talking about it. In this video, I'm going to introduce you to this ETF, talk about how it's composed, its distribution, and the NAV erosion, which is what really caught my attention. You see, I spent a lot of time taking a look at the math and mechanics of income ETFs so you don't have to. Now, before we get started, a quick disclaimer. This information is for education purposes only and not meant as financial or tax advice. So please consult with a licensed financial and tax professional before you make any investment decisions. And also note that past results are not a guarantee of future ones. So one thing I've noticed about income ETFs is that a lot of them focus on writing calls on the same handful of large cap names. I'm talking companies like Microsoft, Nvidia, Apple. And that's not a criticism, it's a concentration problem. If mega cap tech has a bad quarter, every income ETF in your portfolio has a bad quarter at the same time because they're all leaning on the same engine. Now, the ETF I want to introduce you to is IWMI. IWMI doesn't focus on mega tech companies. It's built on the Russell 2000. 2,000 small cap US companies, almost none of which you own anywhere else in your income sleeve. But that's only half the story. The bigger question, the one we're actually here to answer, is whether this fund can pay you over 14% a year without quietly bleeding your principal to do it. Stick with me because the answer is not what most people assume about small cap income funds. Before we get to the number that matters most, you need to understand why this fund is a unicorn. IWMI is the NEOS Russell 2000 High Income ETF. It launched in June of 2024. And its structure is straightforward. It holds close to 100% of its assets in the Vanguard Russell 2000 ETF for the equity exposure. Then it layers Russell 2000 index call options on top for income. Section 1256 contracts which offer pretty tax advantageous benefits to you in its monthly distributions. Now here's what makes it rare. Walk through the covered call ETF category and a lot of funds with real assets under management is writing calls against the S&P 500 or the Nasdaq 100. There is a small handful, IWMI and a few others, that are actually applying the strategy to small caps instead. But the question is NAV erosion, and I'm going to go into that in a little bit. But the bottom line is this. IWMI is going to give you diversification beyond the S&P 500 and the Nasdaq 100. Now, a small cap yield fund should scare you a little bit because small caps are more volatile than large caps. And that's not an opinion, that is just what small caps are. So here's the number. As of the most recent data, IWMI's distribution yield, as you can see from here, is running at over 14%, 14.38% to be exact. And that's above what large covered call funds like a JEPI or SPY-I are currently paying. And that gap exists specifically because small cap options carry higher implied volatility compared to large cap options. More volatility priced into the options means more premium collected. More premium collected means a higher yield handed to you. So the higher yield is not a red flag here. It's the Russell 2000 doing exactly what it's supposed to do inside this structure. But a high yield on its own has never been the full picture. The real question, the one that's kept me from recommending half the funds on this channel that other YouTubers talk about, what the yield is doing to your principal while you collect it. So let's get into it. So what we're looking at here is a 1 year back chart of IWMI. So as I'm recording this, is August the 9th. on a weekend. So looking at the latest trade, it was at $53.14. If I look back a year ago, it was sitting at $45.82. So typically when I discuss NAV erosion, I like to set it in context. So if these numbers were flipped, if this was $53 and this number here was 43, you would see NAV erosion because you actually ended up with less value at the end of the year. And NAV erosion typically is done in 12-month increments at a minimum. But in this case, checking this out, we started at $45.93 and actually ended up with more value at $53.14. So there was no NAV erosion, and that's what I really like about IWMI, what makes it a unicorn. Small cap focus, very high distributions, and no NAV erosion. So that really makes it attractive to me. The bottom line, you have a small cap covered call fund, a yield over 14%, and a structure nobody else is building, at least with no NAV erosion. So I just wanted to share this with you because I also believe that when it comes to income ETFs, it's very important to be diversified, and IWMI is definitely a fund that can allow you to do that. And in the theme of diversification, there is a income ETF that focuses on gold by NEOS. I made a video about it here. Take a look at it. Thanks so much. Have a prosperous rest of your week. I'll see you on the next episode.